Are you worried about the next recession? You are not alone. But what if I told you that you could actually benefit from it? Just like Warren Buffett. That's right. The legendary investor has a long-term approach to investing that sees a recession as an opportunity to buy quality stocks at a discount. In this video, we'll explore Warren Buffett's philosophy and show you how most people can take advantage of the 2023 recession. So, if you're ready to learn how to invest like one of the most successful investors in history, keep watching. Warren Buffett is known for his long-term approach to investing. He doesn't try to time the market or make short-term bets. Instead, he looks for high-quality companies with strong fundamentals that are undervalued by the market. And during a recession, he sees even more opportunities to buy quality stocks at a discount. Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." In other words, when the market is in a downturn, many investors panic and sell their stocks. But Buffett sees this as a chance to buy stocks at a lower price than they're actually worth. This approach has served Buffett well over the years. He made some of his biggest investments during times of economic downturn, such as during the 2008 financial crisis. By staying patient and investing in quality companies, Buffett has been able to generate massive returns over the long term. But how does Buffett identify these high-quality companies? For him, it's all about fundamentals. He looks for companies with strong earnings growth, a solid balance sheet, and a competitive advantage in their industry. These are the companies that are likely to weather a recession and come out even stronger on the other side. Buffett also focuses on companies with a long-term track record of success. He's not interested in short-term fads or companies that are just riding a wave of hype. Instead, he looks for businesses that have a sustainable competitive advantage and can continue to grow and thrive for years to come. So, what can we learn from Buffett's approach to investing during a recession? The key takeaway is that we should stay focused on our long term and not let short-term market fluctuations scare us. By investing in quality companies with strong fundamentals, we can weather the storm and potentially come out even stronger on the other side. While Warren Buffett has the luxury of investing billions of dollars in individual stocks, most people's investments are tied up in their 401k or other retirement accounts. But even with a smaller investment portfolio, there are still ways to benefit from a recession. During a recession, the stock market typically goes down, which can be scary for investors. But as Buffett has shown us, a downturn can also be an opportunity to buy quality stocks at a lower price. This can potentially increase long-term returns and set us up for financial success in the future. However, it's important to remember that investing during a recession requires a long-term approach. It's not about trying to time the market or make quick gains. Instead, we should be looking for quality companies that we can hold on to for years to come. One way to do this is through dollar-cost averaging. This means investing a fixed amount of money at regular intervals, regardless of the market conditions. By doing this, we can take advantage of lower prices during a recession and potentially increase our returns over the long term. Another way to benefit from a recession is by investing in index funds or exchange-traded funds, ETFs, that track the overall market. This way, we're not relying on any one individual stock to perform well. Instead, we invest in a broader market and taking advantage of overall market growth over time. In short, while most people's investment portfolios may be tied up in their retirement accounts, a recession can still be an opportunity to increase long-term returns. By taking a long-term approach, investing regularly, and diversifying our investments, we can potentially benefit from market downturns and set ourselves up for financial success in the future. It's important to note that a recession can be a difficult time for many people, and not everyone will have the means to invest during a downturn. For those who are able to invest, it's important to do so responsibly and within their means. Investing during a recession can also be a good time to reassess our investment strategies and goals. It's a chance to reevaluate our risk tolerance and make any necessary adjustments to our investment portfolio. One thing we should avoid during a recession is panic selling. As Buffett has emphasized, selling our stocks during a downturn can lock in losses and prevent us from taking advantage of potential market upswings in the future. Instead, we should stay focused on our long-term goals and stay disciplined in our investment approach. It's also important to keep in mind that not all stocks are created equal. While some companies may be undervalued during a recession, others may be struggling to stay afloat. Before investing in any individual stock, we should do our due diligence and clearly assess discuss its fundamentals and growth potential. In conclusion, while a recession can be a scary time for investors, it can also be an opportunity to buy quality stocks at a discount and potentially increase long-term returns. By taking a long-term approach, investing regularly, and diversifying our investments, we can weather the storm and set ourselves up for financial success in the future. Now that we've covered Warren Buffett's approach to investing during a recession and how people can benefit from market downturns, let's talk about some practical steps we can take to take advantage of a recession. First and foremost, it's important to be prepared for a recession by having an emergency fund and paying down high-interest debts. This can help us weather any financial storms and avoid having to sell our investments at a loss. Ideally, we should aim to have 3 to 6 months worth of living expenses saved in an easily accessible account, such as a savings or money market account. Once we have our financial foundation in place, we can start looking for quality companies with strong fundamentals that are undervalued by the market. As Warren Buffett has shown us, focusing on companies with a sustainable competitive advantage, strong earnings growth, and a solid balance sheet can help us weather a recession and potentially come out even stronger on the other side. To find undervalued stocks, we can look for companies with a low price-to-earning (PE) ratio or a high dividend yield. We can also look for companies with a long-term track record of success and wide economic moat, meaning they have a competitive advantage that is difficult for other companies to replicate. It's also important to diversify our investments and not put all our eggs in one basket. This means investing in a mix of stocks, bonds, and other assets to spread out our risk. By diversifying, we can reduce the impact of any one investment on our overall portfolio and potentially increase our returns over the long term. One way to diversify our investments is through index funds or ETFs that track the broader market. This way, we're not relying on any one individual stock to perform well. Instead, we're investing in overall market and taking advantage of overall market growth over time. In conclusion, taking advantage of a recession requires a combination of preparation, research, and diversification. By having an emergency fund, paying down high-interest debts, investing in quality companies, and diversifying our investments, we can potentially benefit from market downturns and set ourselves up for financial success in the long term.